For the first time in history, less than 10% of the world's population lives in extreme poverty. 25 years ago, it was over a third. Emerging markets are still home to most of the world's poor, but the pace of change has been breathtaking, and that's important to remember after a year of falling trade volumes, depressed commodity prices, and political instability. Logistics industry executives are braced for more volatility in 2016. Their biggest concerns? Slumping oil prices and a slowing of the world's second largest economy, China. China is a leading investor in emerging markets and buys minerals and metals from Latin America and Africa, energy from the Middle East, and Russia. While other Asian countries make parts for goods that are assembled or finished in China, then exported. Logistic executives are upbeat about India. It has taken initial steps to simplify taxes, cut regulations, and reform key parts of its economy. They see it as the emerging market with the most potential, edging out China. The United Arab Emirates is another bright spot, with the best business climate, infrastructure, and transport connections. In Agility's Logistics Index, it ranked number 2 overall, just behind China. Iran is the world's last big closed-off economy, and following agreement to freeze its nuclear program, it is slowly opening up as sanctions are lifted. Brazil fell into recession in 2015. Executives say it's still an appealing logistics market, but they are concerned about poor governance, government debt, and corruption. Indeed, when they look at Latin America as a whole, they see corruption as the biggest threat to growth. In Asia, their big worry is an economic shock, especially in China. The threat in the Middle East and North Africa? Political turmoil. In Africa, it's bad infrastructure. And for the first time, logistics industry executives see consumer spending by Africa's growing middle class as more important than mineral and resource demand, and view Nigeria and South Africa as the markets with the most potential. Overall, experts disagree on the prospects for emerging markets in 2016. The International Monetary Fund says they will grow at a relatively healthy 4.7%, while JP Morgan opts for a more modest 3.6%. What do you think?